Telekom Malaysia is a top telecommunication and digital infrastructure provider in Malaysia. It offers high-speed broadband, fixed line and IPTV service under the unified brand. Its TM1 division provides cloud computing, cybersecurity and smart city solution for business. TM Global handle international connectivity including submarine cables. TM also support rural development through government initiative like Jendela and invest in innovation via its research subsidiary. Maxis is a leading Malaysian telco providing mobile service through holding prepaid and Maxis postpaid plans. Alongside nationwide fiber broadband, it offers digital solutions such as cloud computing, cybersecurity and IoT. Maxis partner with government agency and educational institution to enhance Malaysia digital ecosystem.
The first one is liquidity ratio. The liquidity ratio is a finite metric for company to determine the capacity to pay short-term debt by using its current asset and liquidity asset. For example, like cash and account receivable. It is important for external and internal user to assess risk, to evaluate lending potential, and finally, to ensure financial stability. There are two types of liquidity ratio. The first one is current ratio and the second one is quick ratio, as we known as acid test ratio. As we can see, is the current ratio. The current ratio is simple definition for us to know how many times a company can cover its current liabilities with a current asset. For example, right now, we have two company, Telekom Malaysia and Maxis. So the formula for current ratio is current asset over by current liabilities. For Telekom Malaysia, after we calculate the current asset and the current liabilities, we get 1.10 ratio 1. And for the Maxis company, we get 0.52 ratio 1. We can interpret, for example, Telekom Malaysia has slightly more current asset than the current liabilities. And for the Maxis company, we can know that they have less current asset than current liabilities. So the comparison we can compute is Telekom Malaysia Berhad has a stronger liquidity position with a current ratio.
To improve the current ratio, Telekom Malaysia should increase its cash reserve and speed up receivable collection. Maxis need to reduce its short-term liabilities and convert non-current asset into cash to improve liquidity.
So next we move to the quick ratio. The quick ratio calculation is a little bit strict because it excludes the inventory and prepayment. Because the both of them is not quickly convert to cash. Right now we can see the comparison between the Telekom Malaysia and Maxis. So for the formula for the quick ratio is quick assets over by current liabilities. So for Telekom Malaysia, we get the ratio is 0.93 ratio 1, which is we can conclude that they have almost enough liquid assets to cover the current liabilities. And for the Maxis, we get 0.08 ratio 1, which is we can conclude that they have very low liquid asset compared to current liabilities. So we can do a comparison that Telekom Malaysia hold a significantly higher proportion of liquid asset relative to its current liabilities compared to Maxis.
Telekom Malaysia can improve its quick ratio by increasing liquid asset and managing liabilities carefully. Maxis should raise its liquid asset and reduce reliance on short-term debt to meet immediate obligation.
Hello everyone, my name is Nurul Amanina. My ID number is 305292. For this part of the presentation, I will be explaining activity ratios, which help us measure how efficiently a company uses its asset and manage its credit collection. We will focus on two key ratios, total asset turnover and accounts receivable turnover, using data from Telekom Malaysia and Maxis Berhad for the year 2024. Activity ratios are important for investors and managers because they show how efficiently a business is operating. These ratios tell us if the company is using its asset and credit sales wisely to generate income. The two main ratios we will look at are total asset turnover and account receivable turnover. The total asset turnover ratio shows how much sales a company makes for every ringgit of assets it owns. So the formula for this ratio is net sales divided by average total assets. So for Telekom Malaysia Berhad, the net sales is 11,712.4 million. And the average total assets is 21,425.2 million. So when we divide, we will get 0.55 times. Meanwhile, for Maxis Berhad, the net sales is 10,536 million, and the average total assets is 22,552 million. So when we divide, we will get 0.47 times. This means Telecom is generating 55 cents in sales for every 1 ringgit of assets compared to Maxis, which only generates 47 cents. Telecom is more efficient in turning its asset into revenue. Next, we look at the accounts receivable turnover. This ratio tells us how many times a company collects its credit sales in 1 year. So the higher the better. So the formula for this ratio is net sales divided by average trade receivables. So for Telekom Malaysia Berhad, average trade receivables is 2,369.5 million. So when we divide, we get 4.89 times. So for Maxis Berhad, its average trade receivables is 2,435 million. So when we divide, we will get 4.34 times. This means Telecom collects its customer payments nearly 5 times a year, while Maxis does it only 4.34 times. It shows Telecom is better at managing its credit policy and cash collection. This table summarizes both ratios. In both cases, Telekom Malaysia has the higher ratio, meaning it is more efficient in using its asset and collecting cash faster from customers. This reflects better operational and financial management compared to Maxis in 2024. So in conclusion, the activity ratio show that Telekom Malaysia outperformed Maxis in 2024. Telecom was better at using its asset to generate sales and collecting payments faster. This gives Telecom an advantage in terms of cash flow, efficiency, and operational strength.
Telekom Malaysia should maximize the use of its asset by increasing sales through better marketing. Maxis need to optimize its asset base by disposing of underperforming asset and boosting sales. To improve the current ratio, Telekom Malaysia should increase its cash reserve and speed up receivable collection. Maxis need to reduce its short-term liabilities and convert non-current assets into cash to improve liquidity.
Assalamualaikum and good morning everyone. My name is Amirul Ashraf bin Azli. Matric number 307146 will present to you about profitability ratio between Telekom Malaysia and Maxis Berhad. Profitability ratio used to assess a company's ability to generate profit relative to its revenue, asset, and also equity. It also helps investors analyze and evaluate how efficiently a business converts its resources into earnings. So this ratio is divided into two, that is profit margin on sale and also return on common shareholders' equity. So for profit margin on sale, it calculates how much money a company earns from its total sale. So for the second one, for return on common shareholders' equity, it measures how well a corporation used the capital invested by its shareholder to earn its profits. The formula for this ratio is net income divided with net sale. Telekom Malaysia has a net income of 2038.9 million and net sale of 11712.4 million. So when we divide it and multiply by 100, giving it a profit margin of 17.4%. So for Maxis Berhad's net income is 1396 million with net sale of 10536 million. So the result we get is profit margin of 13.25%. So this shows that Telekom Malaysia is more efficient at converting sale into profit. This may be due to the broader revenue stream, economies of scale, and also stronger pricing strategies. Meanwhile, Maxis faces challenges like high operational costs and intense market competition, limiting its profitability.
Telekom Malaysia should maintain profit margin by controlling costs and pricing effectively. Maxis need to reduce operational costs and explore new revenue sources to improve profitability.
Now, let's look at the return on common shareholders' equity for Telekom Malaysia Berhad and Maxis Berhad. So, the formula for this ratio is net income minus preferred dividend and divided by average common shareholders' equity. So for Telekom Malaysia, the net income is 2038.9 million and the average common equity we get is about 9631.45 million. So the ROE we get is 22.17%. So for Maxis Berhad, it has a net income of 1396 million and average equity of 5824 million. So the result of ROE is 24%. So this shows that both companies are performing well, but Maxis is slightly more efficient at turning shareholder investment into profits. So the higher the ROE is generally reflect stronger management efficiency and also can be more attractive to investor for seeking better returns.
Telekom Malaysia can increase return on equity by improving efficiency and pursuing growth. Maxis should maintain equity management and reinvest for sustained returns.
Hi, my name is Alhamdulillah binti Zamali and my metric number is 306124. So I'm gonna talk about leverage ratio. Leverage ratio measures a company's debt level compared to its financial account. It shows how assets and business operation are funded. Common comparison include balance sheets, income statement, and cash flow statement. First, debt to asset ratio. Debt to asset ratio measures how much debt a company uses to finance its activities. This considers only interest-bearing debt, excluding other liabilities like account payable. Next, debt to equity ratio. Debt to equity ratio measures how much debt a company has compared to its shareholder equity. A higher ratio means more debt, while a lower ratio indicates less financial leverage. The formula for debt to asset ratio is total liabilities divided by assets. So for Telekom Malaysia Berhad, we got 0.51 and Maxis Berhad is 0.74. Telekom Malaysia Berhad has a lower debt to asset ratio compared to Maxis Berhad, indicating a more conservative approach to financing. Telekom Malaysia Berhad demonstrates better cost control and lower financial risk than Maxis Berhad, as reflected in its lower debt to asset ratio.
Telekom Malaysia conservative debt management supports stability. Maxis need to reduce debt level and seek alternative financing option. Telekom Malaysia keeps a low debt to equity.
Debt to equity ratio. The formula for debt to equity ratio is total debt divided by total equity. So for Telekom Malaysia Berhad, we got 0.34 and Maxis Berhad is 1.57. Telekom Malaysia Berhad's lower debt to equity ratio indicates a more conservative financing strategy with less reliance on debt, leading to lower financial risk. Maxis Berhad higher debt to equity ratio reflects greater reliance on debt financing, which come with higher risk but also the possibility of better returns if managed effectively.
Telekom Malaysia keeps a low debt to equity ratio to minimize risk. Maxis must manage its higher leverage by repaying debt and considering equity financing.